Hello champions, welcome back to this video. This is a follow-up on a video I did some time back. Just go there. It was about a very simple and stupid approach to trading currency pairs or forex and gold. You can see this one here. The word keys stands for keep it simple and stupid. That's why you can see the word keys there. So it's a very simple approach to trading forex based on the candle formation or candle anatomy, which is open, high, low, close, and open, low, high, close. And then later on I did this video explaining how you can actually use this model to flip accounts, where you just use the same principle, but now you go to a lower time frame for what? For refined entries, where you get very nice tight entries with tight stop losses and higher risk reward ratios, which you can easily use to flip accounts. So today we are building up on these two videos. Actually, this is also another same approach. You can go through it, but we are going to build up on it and see what happens. So in a bit to build up on that, I want us to look at a few things. Number one, you cannot trade every new day open candle because some candles will mess you up. Okay, so you cannot trade every new day open candle. So that is why we are here to try and optimize on which new day open candles can be traded. Even though trading every new day open candle will still give you some sense of profit, assuming it gives you all the necessary conditions for your trade. For example, a candle, let me use this new day open candle. This one is the candle opens, forms a high and drops. So as it is forming this high in the lower time frame, you're looking for 2022 ICT model for your entries, so that you can ride on it and go low and go lower. Now you can still do that if all those conditions are met, but we want now to optimize this model and pick on the best trading candles that you can trade with. Here you're trading the new day open candle. The new day open will form your open, then high, and then low and close, or the open, low, high, and close. So what are we looking for in this refinement? We are looking for three things. We are looking for two things. The first thing is we are looking for a situation whereby a candle forms this type of thing, right? Let me redo that. So this is a swing high right here. Why is it a swing high? Because of these three candle pattern, where the high of this candle and the high of this candle are lower than the middle candle. So when this happens, you want to take trades on the next candle. Why? Because this swing high and a close below is showing there is a high probability of this candle going lower. And now when this new day candle opens, that is when now you go to your lower time frame, the 5 minute or the 15-minute time frame, to look for your entries. Okay, now what next? Actually, you can just use this as an example for now. I hope I still be able to access it. We'll go to the 5-minute time frame and see if this at all gave us something to work with. So that was the Wednesday candle. Let me check, was it the Wednesday candle? This was the Friday candle. So Tuesday, Wednesday, Thursday, and Friday candle. So going to the 5-minute time frame, we want to look at that Friday new day open and see what happened at that spot. So let's go there straight away. Here we are. So we want to look at new day open. Where is that new day open? Friday 00, Friday 00. Friday 00 is here on this candle here. So it opens and then we see an impulsive move upwards. If you watched my previous videos, you will remember I said if you see such an impulsive move upwards, then that is most likely the candle forming the high of that day. For example, in our case, this is the open, high, low, close. So this was forming the high of Friday. Okay, and also in this 5-minute time frame, as this is going on, now you want to look for your 2020 ICT 2022 model. We have this sweep, this liquidity sweep, which also sweeps this high right here. You can see those highs right there, and then the next thing we see is a market structure shift at this point. So this is your ICT 2022 model to give you confirmation that price is now finally moving in the direction you anticipate it to move. This was liquidity sweep on the upside, backside liquidity sweep. So once that has happened, you now want to get entries. For example, in this case, you want to look for fair value gaps. Actually, you should just primarily use fair value gaps. You see this inverted fair value gap right here. It was respected and then price came back to it and then dropped lower, and that was your entry right here. As price price closed below, and then you place your trade there, stop loss right above that point, and you want now to look for your 10R, 15R, 20R. Let us see if this gave us a 10R within that Friday. So this gave us a 10R. Was it still on the Friday? Yes, at around 12:45 p.m. afternoon. This gave us that 10R. If you went through the second video where I was teaching how people can flip accounts, you will remember where we add Fibonacci or dealing ranges to candles that get out of our key areas, such as we have this and then we have a dealing range out of it, and we want price to tag into the 50% of this dealing range for your entries. But you can see this did not happen here. When that happens, you will have a tighter stop losses and a way much higher risk to reward ratio. You can see this is 16.65, but since that condition was not met, you only take your first entry and target your 10R, 15R, or whatever you want to target for the day. So that is a demonstration of how to look at it. Now that was because if you look at this, I think this should be somewhere around here. Tuesday close high, and then Wednesday high of the Wednesday, and then drop to close below, and then this was Thursday, and then Friday we have the open of Friday forming a high. So this was the low of that Thursday. This was the low of Thursday, and then Friday opening to form a high and dropping lower. So that is the basic simple explanation behind this new day open high low close. This was a classic example of open high low close. So the Friday candle opened, formed a high, then dropped lower, and it gave you a very simple, a very good entry. Now going back to the daily candle, we can now have a look at more examples where we have such kind of things. This right here was one example. Where did we have another example? We had this. Where can I get it? Low, high, low. Sorry. Low, high, low. And then you look for your sell setups in the next candle. This was not a good one because you can see it formed here and then it opened here and then came back up. If this is to happen, when you go to the lower time frames, this will not even give you a sell setup because you will be looking for that typical 2022 ICT model, which probably will not exist at that point. When such things happen, you don't even need to place a trade there. So another example, you can have a look at this low, this low right there, and then this low that is higher than this one, and then take your trade on the next candle. So this was a very good candle. This was a Friday, 25th June. Now let us look at another example. Another example can be this one right here. Right, this, and then the next candle gave us a very good day, trading day. And then also this, right, then the next candle gave us a good trading day. Now what is the second thing you want to look for? The second thing you want to look for are if price is reversing this situation or these circumstances here, or this condition is giving us a reversal. Why would price be reversing from this point, for example, or this point, or this point, this point? This is actually you taking trades without having to look for anything else. But now you want to get those A+ setups. The A+ setups will be when these activities or these conditions are coming off, or this price reaction is coming off a key area such as a fair value gap. For example, let me use this one. This one came from this fair value gap right here. You see this fair value gap, the gap right here, and then price came out of it all the way and gave us these opportunities. And these were not the only opportunities of this area, right? You can see right here we had an opportunity. You get this, right, and then that high there. So this swing low came out of this fair value gap, and the next candle gave us a very good buying opportunity. So this was a very classic buy example. So these three opportunities existed because of that fair value gap. You'll ask yourself, where did these reactions come out of? Or these ones right here, right? Or this one. Let us start with this one. This one was a good one because of this fair value gap right here. You can see it gave us this and then dropped, this and then dropped. So this candle here did not give us a sell setup. You may want to look at the next candle, which would have given you next setup. This is the all-time high, so we are actually trading at an area of all-time high. If you look at this week, this box, this candle, we are inside an all-time high zone. Anyway, so those were your days for gold. And how many trading opportunities did you get in these areas? You got one right here, 2, let me count from this area, 1, 2, 3, 4, 5, 6. Okay, so those are good trading days. You can take on those ones. Now let us look at another example. Euro USD. Euro USD is also a good model, a good pair to trade these type of things. Without going any further, look at this. This is a very good example. A high and then a higher high, a swing high, and then we closed lower, right? This swing high was giving us a suggestion that price would go lower, and this was Monday. So this candle gave us very good sell opportunity. looking at this, look at this, right? A lower low, and then this low that closed above the previous lower low, and then this price, this daily candle gave us a good buy opportunity. So once it opens, drop the 5-minute time frame and look for your entries. And then you also have this highest high, and then that, so this swing high giving us a low, and then the next day's candle gave us a very good opportunity. Now for some of these pairs, you also want to look for entry opportunities in the next few candles. For example, we have this candle that gave us an opportunity, and then maybe an absent opportunity here, but this one also gave us one. This one gave us an opportunity and then another one. So these two candles gave us sell opportunities, these two candles gave us buy opportunities, sell opportunities. And looking at this one as well, note that one, you want to have this, and this. And the next candle gave us buy opportunities and buy opportunities. You may ask yourself why this close is lower than this, because this was new week open gap. There was a new week open gap right there. So those are the examples you want to look at. Okay, now for this Euro USD, what else would you look for? You want to look for where is price reacting off of, where is price reacting off of. Okay, so this example here gave us from this fair value gap. You can see this daily fair value gap pushed price higher, and the next few candles or two candles gave us buy opportunities. What about this one? Very easy to spot things. These are not hard things to spot. You can see that fair value gap, price reacting off of it and giving us those buys. Where else do we have interesting opportunities? We are not seeing other interesting opportunities. Maybe we can look at these two examples where was price coming off of. I think this was there was, I think there was fair value gap. Let me try and highlight the two of them and see where price was coming off of. So yes, we have a couple of areas. We have this inverted fair value gap right there. You can see this fair value gap right there. And then we also had this gap here, a gap here. So that would mean this was holding value. And this was from a very old high, very old fair value gap. You see, this was August 21st, August 2021, on 17th. Let me close this. Yeah, a fair value gap coming from all the way from 2021 to 2025. 5 years later is when you get this opportunity. So even those very old fair value gaps, they still hold value. Okay, so that is it. That is how I wanted to, that is what I wanted to present today on how you can refine your new day open high, new day open low trading concept or model, and you can use it to get a few trades per month, or maybe 4 or 5 or 6 per month. If you're trading multiple pairs, you can use that as well to get more trades, maybe 20 or 10, 15 or 20, and that would have been good for you. So we have this and this. The next candle gave us a sell. Look at this, right? Buy opportunities right there. Look at this, sell opportunities. Look at this internal one, right? Sell opportunities, and this was coming off from a fair value gap right there. Sell opportunity on this candle, and then Yeah, so you want to look for these things for better entries or better opportunities, even though you can still trade your daily, every day, new day open, daily candle, but sustainability and losses you might get into a few losses. So this give us buys, and this right there give us sells. So go look at them as you trade this model. Also, you want to consider using, you want to take these things into consideration. I want to wish you a happy trading and all the best.